comments, make sure. What's up, good people? What's up, good people? How you guys doing? How you doing? I was on the wrong camera already. Listen, you guys know what time it is. We got Stockmo, we got Kenan Grace in the house, and we're gonna have a ball today. We're just gonna get down with it. I'm gonna bring these gentlemen in right now. What's up, gentlemen?
How's it going, everybody? Let's get it.
All right, all right, all
Yeah, you
right.
know it. We're all about making the money today, so
That's
hopefully we can
it.
bring some good advice.
That's it. Kenan, give them a formal welcome.
Let's do it. This is not financial advice.
Yes.
I just hope you bought your oven mitts, baby, because it's about to get hot in the kitchen. Let's get it. We're ready
I
now.
love it.
Yes, sir. Stockmo, give them a formal welcome.
I just want to say thanks a lot, man. It's hard to follow that up. I don't know if I got that energy. Maybe about 20 years ago I did, but I'm doing the best I can. Glad to be with you two gentlemen. You can't spend a better Wednesday night just sitting down. We'll throw out some ideas and try to make sure we're taking advantage of everything this market is offering right now.
Yes. Yes. Hey, Mo, you got to give them your sign in, man. You got to give them your sign in. Stick around.
Hey, yeah, you know what? I haven't done that, Larry, in a long time. I used to, to cut down the videos.
Yeah.
For those who remember on my channel, over there, I'd always start out saying, "Hey, Stockmo here. Hope old financial advisor, educator, blah blah blah." And then as I would sign out the intro, I'd say what we're going to talk about. Then I have my catch line. I still love it. I got to incorporate it back in. It would be like, stick around because I think you're going to like what I got for you. And then we'd have this little video play, and then I'd come back. Hey, Stockmo, back with you. Blah 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 blah. And of course at the end, like I always say, let's get out there and make some money. So we had a couple things, but it's changed. We had some other ones too from 2 years ago. But things in YouTube, things in the stock market, it's always changing. And I do the best to keep up. I forgot my oven mitts because I know it's going to get hot today. So we're going to do some damage. That's for sure.
It's getting hot in the kitchen. We got oven mitts. We got coffee cups. And we got Tesla cats running around.
Yes.
Oh, man.
Absolutely.
So, hey, we got a lot to cover. I'm going to try to. I got an hourglass right here. Let me see if I can let y'all see it. Got an hourglass right here. So I'm going to try to be on time, good people.
I like it.
I'm going to try to be timely with it. We got a lot to talk about. There's a lot going on in the market today. Hey, Stockmo, can you give us a brief market overview of what happened
Yeah, I
today?
can do that for you. I got to tell you, a lot of things going on out there. For those that haven't been following along, it's getting ugly over there. You got Russia shutting off gas to Bulgaria and Poland. And they refused a payment from Germany, the economic powerhouse in the EU. So things probably most likely are going to get more sketchy over there, thus affecting global prices for energy. And that effect will roll off to China, will roll off to the US. You got China with COVID shutdowns. I don't know how bad it is, but it was over 300 to 400 million citizens of China not being able to go to work and do stuff. So you're having global supply chain issues that are affecting the market. You got the Fed getting super aggressive. You got Deutsche Bank coming out saying that no longer do we see a mild recession. That's right. They upgraded it to a major recession in 2023 or 2024. I don't know exactly when they called that. But you know what? Things are still all doom and gloom, except I see opportunity. We are getting down to that basement level of the S&P 500 around 2170. I thought it could get maxed out for the S&P 500, and now we're right there. And last time we seen the VIX spike above 30, now it's up in the low 30s. We had a massive run in the market, and I think for going forward, Kenan, Larry, I'll take your opinions on this. We're going to see a year of roller coaster up and down. And for those who are willing to sell the rips and buy the dips, this will be an opportunity to make money in a little different way. 2020, 2021, the beginning, we could just buy and hold. And you made money every day. Now we got to be smarter investors. We got to be traders sometimes. And that means selling on the big run-ups and then buying as it eventually comes back down because of the Fed, because of COVID, because of everything else. And that's how I see this year. And that's some of the news I have been reading today.
What did you see today in the market, Kenan?
I want everyone to take a second and look at Facebook stock. We were just
Come
talking
on
about
now.
this before we got in. And the
Yep.
reason I want to just bring this up is because it goes to Stock Mo, Larry Jones' point of there's opportunity here. Now, if you bought Facebook yesterday, 2 days ago, 3 days ago, everyone was saying, oh man, you're a fool. What are you doing? But now look at it. It jumped up 20% just because they tell you to trade basically off of, news catalysts, technicals, and things like that. But you got to understand that Wall Street, a lot of the time, they're trading off emotion, family. I just want you to
Mm-hmm.
really understand that. Not all the time, but understand often institutions who have so much money, they're spending other people's money a lot of the time, especially when you look at these hedge funds. And what they want to do is say, oh, look, we made a great decision. So then what they'll do is they'll see something moving and then they'll jump in and then exacerbate the move. So that when you look at something like Facebook, they might have seen a little bit of a pump because the earnings weren't that great. They were
Right.
okay. In some
Right.
areas, they were good. In some areas, they were pretty lukewarm to
Yeah.
cold. But they see a little bit of a pump and then people jump in. But guess what? Those who are dollar cost averaging in, let me tell you right now, Facebook is about 207 right now. It dropped all the way down to 169. If you were just dollar cost averaging your way in because you believe that this company would make some money, then you would have been fine without even timing the market. You would have just been saying, okay, look, you know what? Long term, I think Meta, which is Facebook, is going to do okay. I like the company. I like Instagram, all these other kind of things. And then you say, all right, look, I'm going to invest in what I know and believe. And then boom, make some money there.
I hear you, man. I hear you. Listen, I'm gonna get right into some hot questions, and I got for you guys. The first question is because we want this to be, as they say, action packed. How are
That's
you
right.
guys preparing for the upcoming recession, regardless of when it is? Mo, I'm going to start with you. How are you preparing, or how would you prepare for upcoming recession?
Yeah, if we see a recession, you can look back on a lot of historical data. Past recessions had certain sectors that have outperformed. Most of that, you're looking at energy, the financials, because the Fed starts tightening, and when they start to tighten, they raise those rates, the Fed rates, thus giving some of these financial institutions better profits through those periods, and so a lot of money starts to flow into there. And think recession, times get tight. We don't have money to blow on fancy restaurants. So some
Mm-hmm.
of the stocks that deal with, I'm thinking going out and buying cereal, some of those companies that make those kind of products that you don't get excited about start to get a little bit of love. So I like financials. I like the definitely energy sometimes, believe it or not, can do okay. Utilities obviously is a favorite for, not that they're going to go through, but people pay their electric, their water bills or sewer, all that stuff. So you find some utilities you can invest in. I like healthcare. This is one of my favorites. Healthcare is always growing. People need healthcare. And so the healthcare sector is one I like to look into as well. I know some people talk about consumer discretionary as well. So there's some of the sectors I'm looking into. I've been making some purchases into restaurants as well. Yum, McDonald's, even Walmart and Costco. They're decent plays. I personally, one of my favorite is CVS. It's actually one of my favorite plays. I've been loading up more and more and more with that one because I do believe that they will play a big part with COVID having the waves and just a solid company at a decent valuation. So there's some of them I'm looking at, some of the sectors. Now, with some of these growth stocks, though, guys, I got to tell you, they are getting beat down to a point that some of them are 70, 80% down.
Yep.
And even like I was talking about PayPal in the latest video I just got done filming up. And I got to tell you, they are extremely attractive right now compared to their pricing just a little bit ago. We're still talking about PayPal. This is a global company and a powerhouse that I think has a lot of opportunity to grow. So some of these stocks are 70 to 80% off, but leaders in their sectors. And of course, they're new, if you will, and there's some growth pains to be had. But once those growth pains are through, I expect these to double, triple, even some of them. Don't be surprised to see go 10 times. It's
Yep.
just, are we fortunate enough to have those in our portfolios?
Good stuff.
Right.
I'm gonna
So I'll
I'm gonna
jump
tell
in.
you guys ditto to what Mo said. I
You go
know
for
that
it.
sounds, but I'm literally ditto to what Mo said. Listen, before you answer, Kenan, we
Go for
got
it.
we got 1,000 people watching and we got 430 likes. Can you go ahead and do a station break for us, Kenan?
All right, family, look, you know what time it is. We have to get to 1,000 likes. The YouTube algorithm, let me tell you something. I want you to understand this. Me, Larry Moe, we talk about these things all the time. When the stock market is coming down, YouTube stops pushing out content that increases financial literacy. How do we combat that? We work together. You like the video, and not even just for yourself or for
Right,
us, for other people, so that they can also learn the same information that you are learning. I promise
right.
you this right now. The drama, oh yeah, people know what's going on with Kim and Kanye.
Yep.
The
Come on, man.
relationship stuff, things like that, they pushing that, family. What we got to do is we have to push financial literacy so everybody can be a part of it and everybody can know. And how do you help us spread the message? All you got
Yep.
to do is hit the like button. It's free 99. Straight
That's
up.
it. I love that. Hey, Kenan, so I want you to answer the same question. How are you preparing for that? And Mo, while he's doing that, I want you to pull up your screen that has your subscriber number, Mo. I want you to pull that up. Just go to your YouTube, your own YouTube page, and just go to your YouTube page. We want to look at your subscriber number, and then we're gonna come to that after Kenan. Go ahead, Kenan.
Okay, yeah. So there's stock mo. He already hit the stock part, basically talking about, what sectors to look at. I want you to focus on two additional sectors. What are they? I'm gonna make them up right now. The first sector is your job. I want you to focus on that. During a recession, you have to keep your job to keep the money flowing. You got to make sure you have that security, and whatever your main income is, I want you to really think about that. Look at your industry. Think about what happened last time there was a pullback. Think about what happened last time there was a recession. If the area that you are in, and I'm telling you this, and you feel like I don't know you, but I do. I love you. I want you to understand this, and I'm telling you this because if you can keep your job, then you will make it through this. Or if you can keep your mainstream income, you will make it through this. That's the first sector I want you to look at. I want you to look at what happened last time. Were they cutting people off in your area? If so, tighten up that resume, family, straight up. I'm not telling you this to scare you. I'm telling you this to prepare you. The next thing is I want you to basically get your cash on point in terms of your dry powder, that cash reservation, that savings account. We also are going to invest, but you got to make sure you have that cash, family. It's going to be needed now more than ever. And to give you an example of that, you might not be able to see this too well, so I'll show you quickly. No, you can't see it too well on my screen. It's blurry. But I'll read it to you. This is someone in my Discord who is a part of our 26-week challenge. He said this: in the 26-week challenge, the whole family, we trying to get to $5,000 by following a specific strategy of saving a specific dollar amount that increases incrementally, basically every single week. Now, check this out. My guy said this. He said, Kenan, you're a true lifesaver. He said, I just got nailed by a drunk driver this weekend, and I won't be able to
Wow.
work for a few days because I got back issues now. And then he said, without this savings challenge, even though I'm going to get behind in it, I wouldn't have had the rent saved up. And then I could have lost my place. And I'm thinking to myself, wow. So he said, big ups to me. And listen, big ups to you, because all I did was write the
Right,
play, but you
right.
ran the ball. And I
You
want to
did.
give you a major shout out for that. Straight up,
That's awesome.
straight up like that.
Yep, that's awesome. That's awesome. Hey, I'm going to tell you guys the same thing. I'm going to tell you the absolute same thing. Cash up. Cash up. As a matter of fact, I want everybody to go today. I want you to go and go down on my page, look in the description. You see Moo. What I'm doing with the Moo link is that's where we're cashing up. So you guys know we do our swing. Those of you that follow me, we do our swing trades in stock and crypto in Weeble. But I want you to download my link below. And yes, it does help the page. But we're going to give Moo purpose. And I'm going to talk about another purpose that has to do with Twitter and DWAC. We're going to get into that too. I'm going to tell you another reason why you need to download Moo today. But for right now, that's where we're cashing up. Like Kenan said, you want to make sure that your job is secure, because one of the lagging indicators of a recession is job loss, right? And that has yet to happen. As a matter of fact, there is an epiphany. There's tons of jobs out there that's open. So what I would be doing right now is I would work, if you can work another hour or two a day and put that away, then that's what you do. Because you want to have enough dry powder to buy through this upcoming recession. Me personally, I believe it's going to be short. You know, we don't know how severe it's going to be. Everybody's trying to guess how severe it is, but I believe it will be short-lived. But I also believe that those of us that have dry powder that buy through the recession will just multiply our money. What do you got to say about that, Stock Mo?
Yeah, I think there's definitely some opportunities out there right now. Uh, it's tough because we tell a lot of people buy the dip, have that dry powder on the sideline. And to be honest, a lot of the retail plays over the last year, going back to February 2021, a lot of them been dropping. We had a little bit of reprieve back in November 2021. We made bank. All of a sudden, you get back into December, January 2022, the market has one of the worst starts in decades. And now we continue that worst start where we're almost officially in our second correction, which could be one of the shortest times between the last correction and a long time. Let's just say that. And so I know a lot of people are like, yo, I've been buying a dip. I'm doing everything I can. I had 20% on the sideline. Now I spent that 20% getting in, dollar cost averaging. My opinion is that I know it's tough. You did what you needed to do. I personally have been buying. I've been spending a lot of that dry powder, and it's getting low. There's not a lot left. So will we see better times? Absolutely. That I can tell you right now, we will see the market start to run up again eventually. Is eventually in a month, is eventually in a half a year. It might be even 2024 you got to wait. Do I think it's going to be that long? Absolutely not. But could it be? It could be, but that means trading sideways, like I said earlier, taking advantage of the rips, and then also with the dips. And that could be selling on big runs and then buying back in during the dips, which we might see. So there's opportunity, and you can use all these different things to leverage your opportunities as we talk about the different platforms and everything else. So definitely chances out there to be to be taken, I should say, and hopefully a lot of money to be made.
Hey, Kenan.
Everybody, let me take you under the hood real quick. Let me take you under the hood of this YouTube stuff. Notice that we just had 1,000 people in the building. We asked you to hit the like so the notification could go out. We playing with a robot here, family. This is I'm telling you, they playing with the views. Whenever finances are going down in terms of the stock market, they playing with the views. And I just want y'all to really understand the kind of monster we're dealing with, right? Does this sound like somebody or an institution that has your best interest in mind? Shouldn't this be the time when everybody figures out, oh man, you know what? I should have bought. I wanted to take you with a perfect example. Do you remember when GameStop ran up?
Yep.
Understand that I want to say a year before GameStop ran up, people on Reddit, people on YouTube, everybody was talking, buy it, buy it, buy it, buy it, buy it, buy it. Why you didn't hear about it, family? Because nobody was basically who is in the background on YouTube was saying, okay, this is the content that we can let out now. But once it happened, after the boat left, they said, oh, look, everybody's looking at it now. Push it, push it, push it, push it. So then people got in late and then it comes all the way down. And I want you to understand that we are literally dealing with a robot, an algorithm that this is the best time right now, in my opinion, when you see stocks come down cheap for us to be loading up. We should have 10,000 people in the building, right? But why aren't they there? I promise you this. We're gonna see comments on this video in 2 days, 3 days. Oh man, I didn't get the notification, even though I hit the bell. Right? I'm telling you this. Always, straight up.
Those are facts. Those are facts. Yeah. And so we have to, when there's a scripture in the good book that says, when I want to do good, evil is always around. And it's the truth, man. Mm-hmm. It is so true because there's blockers. I did that on blocks, all right? But we're gonna keep it moving, and we're gonna do more of this talk towards the end. Don't fall for the okie doke, good people. This is your shot. You know that musical, I want to I want to take my shot, whatever that musical is. This is your shot, like coming up, that what's happening. All we got to do is get prepared, and then there'll be a time for us to run the ball, right? And when we run the ball, it's going to be a major touchdown, right? So that's what's going on right now. Hey, what is a good stock to dollar cost average in through a recession? Like, let's just say we're in 2023, the second half of 2023, and we go into a recession. What is, and I know Mo, you threw a lot of them out there, but what is a good stock for people to dollar cost average through a recession?
Yeah, I'll start with this one. I got to tell you, if you look at the historical data of the last, we'll say, quite a few decades of recessions, you will notice that in every single recession, that the S&P 500 bottoms out in the middle of it, around that middle. By the time, and sometimes it goes 3/4 of the way through the recession, but before the recession is even over, and like times are still tight, people are struggling. I can tell you, I remember seeing the family, my dad losing his job, my mom. It was ugly times during a lot of recessions I've been through. And I remember, and if you look at the markets, they always are already going way up before the recession is officially over. Before you get the government saying, hey, good times are back, the stock market is a leading indicator of that. You're going to know when that recession's almost done based on how that stock market's doing.
Yeah.
Everybody's going to be fearful. You're going to see numbers going, unemployment's getting crazy, it's getting worse. And all of a sudden the market starts going higher. You're going to see, if you look at the data over the last, I'd say probably 8 to 10 recessions, that's the way it is. So what stocks are the best? I've said it before. Some of the restaurant stocks out there, think cheaper restaurants. Are you going to be going out to the higher end ones that you can't afford? Or are you thinking McDonald's, Burger King, Wendy's, those kind of stocks are going to get some love? They do. I like Yum Brands as well. And then, of course, the financials, I still think they're going to do well. I think they're under a little bit of pressure right now, but I do think overall they're going to outperform. Healthcare and financials are my two favorite. Healthcare probably leading it a little bit more just because this recession would be based on COVID and a few other things, but COVID's the big thing. So I think healthcare would be the main play for this one. And I'm thinking Johnson & Johnson. I really like Johnson & Johnson, CVS, Walgreens, kind of retail, with the sales, but, a combination of all that right there. So those three, and like I said, Goldman Sachs, JP Morgan, and Bank of America are my three top financials as well. So I gave you a boatload of information right there that I think should do very well.
Mm-hmm. Hey, let's go to what stock do you think is oversold? What stock do you think is oversold? Anybody who want to start first? Actually, Mo, you kind of touched on that. I think
Yeah.
it was you, Mo. You can repeat it if for those of us that just tuned in. Go ahead.
Well, I once again, PayPal was
There
one
you
that I
go.
think's really oversold.
Yep.
DraftKings, a couple of those like that.
Yep.
Leaders in their sectors, like DraftKings, one of the biggest.
Mm-hmm.
PayPal is one of the biggest, but yet
Yes.
they're down 70 to 80%. So I'm
Yes.
actually curious to hear, what do you think about that, Kenan? Because I'm actually curious to hear what you guys have in
Yeah.
terms of that. But
Right.
some of the ones I named have been beaten up.
Yeah. Actually, PayPal is one that is just oversold for me. Just oversold. And just imagine what'll happen during a recession. So it's one of the ones that you can literally start dollar cost averaging in right now because it's oversold right now. In spite of a looming recession, it's oversold right now. And so even
Right.
if you just start to dollar cost average, meaning that you're going to be buying it from now, when a recession happens, all through the recession, and then watch the multiples that you could make, you know, 14 months after a recession, and you just keep dollar cost averaging through. What you got, Kenan?
So one thing I like to say to everyone is I really like to give practical advice that's actionable. Now, to do so, I want you to understand RSI, relative strength index. This is what we're talking about when we mean oversold. When something
Mm-hmm.
is oversold, it means there's way too much momentum on the selling side and there's no
Yes.
way that it can continue. Imagine that you're in a car, this is your car, and it died. And we are pushing this car as fast as we can and we're sprinting behind it, literally pushing it, right? We can only hold this up for so long, whether we were pushing it from the trunk or pushing it from the engine, right? No matter which way, we can only push it at our maximum speed for a set amount of time. With that being said, the momentum will die down. So in this case, on the stock market case, we're seeing stocks being forced down, like it's rushing down. Too much momentum on the downside for too long, meaning that we're going to get a bounce sooner or later. Now, one stock that I see doing that I would be amazed if this one didn't bounce back. Disney. Disney is getting smacked. Now, in
Man,
terms of
come on,
RSI,
man.
anything below 30 is considered basically oversold. Too much selling is likely to go back up. Anything over 70 on the RSI is considered overbought. Too much buying. You can't hold that momentum. It's going to come back down. Disney right now on the RSI is not 30 at oversold. It's down in the 25, 26. Family is getting smacked.
Mashed.
And now, why is this one I want you to keep an eye on?
Yep.
You got to understand, they own Star Wars. They own Marvel. They killing the movie game, especially if you're somebody who is interested in like an AMC or movie theater kind of stock. Where you think their money coming from? Spider-Man Homecoming, all these other kind of different big movies that keep coming out. Doctor Strange is coming out. I know you probably heard about all of these different kind of Marvel movies that are pretty much supporting the movie theater business. So you got to keep in mind, and that's just one thing they have. Let's be clear, with the pandemic dying down in certain areas, oh yeah, you're gonna see everybody going back to Disneyland, Disney World, all place. And then let's keep in mind the cruises. There's still a lot of restrictions on the cruises, but Disney cruises was huge, family. So they're not even tapped in to a lot of the potential that they have. And come on now, I'm not even gonna mention Disney Plus taking some of the market away from Netflix. Like there's so much going on there. There's so much going on there, straight up. And then another stock I want you to keep an eye on, I'll just be quick with this one, is Apple. You never met someone who ever said...
Hold on 1 second.
Go ahead.
One last thing on Disney. The geopolitical stuff is going to be short. Is going to go away. So
definitely.
Not the geopolitical stuff, but the political stuff. You know, we all know about the bill in Florida and all of that. That's going to soon be a thing of the past. That's all I'm going to add to the Disney play. Go ahead, Kenan.
Yeah, that's a short-term negative catalyst.
Exactly.
Right? So short-term. So you don't even got to worry about that for too long. Now, another stock that I want to bring into your eyes is Apple. You never heard someone ever say to you, man, I wish I didn't invest in Apple 2 years ago. No one ever said that since it came out, right? Everybody just dollar cost averaging that. And why do I want to bring this up? And I'm not telling you to buy, hold, or sell. I just want to bring this to your attention because it's like this. If you are watching this on an Apple device or someone in your house has an Apple device, I want you to put a 1 in the chat so we can know who we talking to, family. Now, why am I even asking this? Because I want you to invest in the things that you already know, understand, and believe in. Now, if you have an Apple device, I'm talking a MacBook, I'm talking an iPhone, your kids want an iPhone, anything like that, put a 1 in the chat because you know why people buy it. Ease of use. There might be better phones out there. Let's keep it real. But people like the ease of use, the interface. And then, when Apple comes out with a new phone, we never know what it's going to cost because they get to pick because they know the demand is there.
They
get to choose. They get to just straight up pick it. But keep an eye on that. Look at all the ones coming in the chat. It's a lot of people, family. Just as simple as that. Let's keep it going, Larry. It's on you.
Yep. Hey, this is going to help somebody. And then I'm going to ask this question and then we're going to get into Twitter and DWAC because I got some hot stuff for you guys on this play. So I'm going to say this because people need to hear this, right? What was your biggest investment mistake that taught you a lesson starting with you, Mo? The biggest investment mistake that taught you the biggest lesson since you've been
I got to tell you. Yeah, we all have those stories. I've done some really, great plays out there. When I was younger, I took a lot more risk. And now I'm well diversified, a lot of good stocks in the portfolios. But when I was younger, I had $10,000 to my name. I didn't have a penny more. That's all I had to invest. And I remember thinking to myself, look, there's some great companies out there. And I think I'm not going to diversify. I'm going to go all in. And I felt good about my research. I felt like I was doing the right moves, and I did. But it taught me a lesson because it came down to 2 stocks for me. And the first stock was Cisco. Cisco was trading really deep discount. And I saw the contracts rolling in for them. I knew the revenue was going to absolutely crush moving forward. And they did. And so I put all 10,000 into Cisco. No diversification. I'm going all in. The other stock I had a chance of buying, and this is back when I first got into education, was a little known stock that was starting to make a footprint into education. That stock, they invented a little computer called the Mac. And the Mac was by Apple. And Apple was trading down in the single dollars range. And I was afraid they were going to go bankrupt. They were running out of money. They didn't have a lot of great products. And all of a sudden they start to get the iPhone, the little iPod, the Mac starts to take off for colleges around the world. And that 10 grand would have been worth well over $1 million today. And I didn't diversify back then. So what I've learned is it's fine if you want to try to go. And I did make money on the Cisco. Make no doubts about that, but not the kind of money I would have made with Apple. So I learned diversification is your friend. Getting out there, and I like to have 20 to 40 different stocks in an overall portfolio. I think 20 is a good number. If you want a little bit more risk, I get it. You want to go 10 to 20, that's fine for those willing to take more risk. And of course, I know there's people out there, it's all in one stock, and if they can leverage it, they will. So I get that. There's different people, different strokes for different folks. And I absolutely agree with that. I get it. And I think there's different risk tolerance. I have a very high risk tolerance, but also learned through my decades of experience that, let's be smart. You can't prepare for an October 1987 when the market drops 20% in a day. And so, be careful what you do. And I've learned through those experiences. So that's kind of what, life has taught me.
I'm going to go next, Kenan, and then you follow up. Biggest mistake
Right.
I made, I know some of you are going to go, dag, you old. I made my first investment 1992, all right? 92. And my biggest mistake was I didn't do my own research. I caught a hot tip and I got burned and lost all of my money, just lost it. And I didn't diversify. I just jumped in. Like he said it. It's got to be true. This is like, it's on the internet. It's got to be true. And so I learned from that. But what happens was I got burned. But the even bigger mistake was I didn't trade for years after that. I just let years go by. And I really, off and on, put a little here, a little there. But then I didn't seriously get back into the market until 2007, right? So like, let me get serious about this again. But what I can tell you is now that I do my research, it was the absolute biggest lesson I learned, because what I did was there was a company called Mara, M-A-R-A. I bought it at $4.50 and it tanked to $1.50 in 2020, right? I did my research and I found out that they were about to explode. So I literally quadrupled down. All right, and I'm telling you guys to be aggressive like this. We were in a bull market. And then, it ran up to like $58. So I learned from that. But on the other hand, I used to have all of my stock with no stop losses, just willy-nilly, and you have to learn from your mistakes. But the biggest mistake of them all was getting burned and getting out of the market, because had I not got back in, I wouldn't be as successful as I am now, though minimal compared to others. I wouldn't be as successful as I am now had I not simply got back in the market, exercised some patience, don't FOMO, right? And don't panic sell. Kenan.
All right, that's good. And I got one. And I feel like this one might be relatable to a lot of people. Maybe it isn't. But according to the statistic I'm looking at right now, 43.4 million borrowers in the United States right now of student loan debt. The reason I bring this up is because what is one of the worst investment mistakes that I've ever made was I got into a high amount of student loan debt. And I'd be specific, without having a plan, right? I went to college. I want you to picture this. Follow me on this journey. I go to college, first generation college student, right? Parents never went to college, anything like that. So then, you know what? Boom, I'm winning. I'm going to college. This is great. What are you going to study? Who knows? But I'm going to college, right? Oh, yeah. I get there. They tell me, Kenan Grace, you have a $7,000 bill. I'm 18 years old. I don't got that. That's what I'm thinking to myself, right? I don't have it. So then they like, oh, no, it's cool. This is just for this semester, not covering books. And we will give you a loan. All you got to do is sign here on the dotted line. Me, no plan. I'm like, okay, cool, great. I still could go to college. Boom, first semester out the way. Next semester out the way. Next semester out the way. No plan. I don't know what to do. right?
Right.
Let me try this major out. Let me try that major out. Switch up. I like the first one better. Let me go back. Next
Yep.
thing you know, family, $100,000 in debt from student loans. I ended up getting a degree. I got a bachelor's degree in science. I got a master's degree in education and teaching because I figured out at the end what I was going to do. But
Right.
all of this could have cost me $20,000, $30,000. But it took me $70,000 of a mistake that got me to $100,000 as an 18-year-old kid who they let you sign these bills and sign these loans with no idea. Let me tell you something today. Me thinking back right now, how I had $100,000 basically in student loan debt, 7% interest rate. Let me tell you something else. They gave me the minimum payment when I was done. And I'm like, okay, cool, right? I got to pay the minimum payment. I'm looking for a job. They tell me it's $230 a month. Okay, cool. I can afford that. My bill is $100,000. You see what I'm saying? My interest rate is 7%. I wasn't even paying the interest off. So then, you know what? It was going to 101, 102, 103, 104. The reason I'm bringing this up to you is because I want you to understand the investor that I am today would have never made that kind of mistake. I would have said, if I'm going to college, this is an investment. I have to say, what am I going here for? What are my plans? What are my goals? What is going to be the return on investment? Should I pay $100,000 a year to get a $30,000 a year job? Is that a good investment? Right? That's how I would think today. And I want you to be able to think these ways and then be able to talk to your kids about these kind of things, because guess what? The government will just let them take on any loan. They can't buy liquor, right? There's many things they can't do, but they could go take on $100,000 worth of debt, family. And I really want you to really, really make sure that you understand that I can see it in Larry and I can see it in Mo. We're not born with the knowledge we have. This knowledge is built from the ground up, from the
Yeah.
mistakes after mistakes after mistakes. And then we try to tell you so you don't make the same ones.
That's true. That's
Yeah,
true.
I got to jump in on that
Go
just
ahead.
because, and I do want to wish Abby out there a happy birthday. I see in the comments they said they love us as YouTubers. Wish her a happy birthday. So Abby, from all three of us,
Happy
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 birthday,
birthday,
Abby.
Abby.
Absolutely. Yeah. Now let me say this about that education thing. As an educator myself in the classroom for almost 2 decades, I told students before, and I know students who owe $300,000 and they do social work, they do teaching. If you're going to be a teacher, you're going to work for society to try to better it. You don't go to a private school for 50 to 100,000 a year to get a job that pays 30 to 50,000 if you're lucky. You got to look at it like Kenan said, man, it is an investment. Am I willing to pay 100,000 for 4 years of college if I'm going to come out and make 100,000? Yeah, but am I going to pay 100,000 to make 30,000 before taxes? Because after the government gets his little hands on it, you're left with like 24. All right, now you're paying, depending on what kind of program you get for the payback, a lot. Like Kenan said, if you got 7% interest on 100K, that's 7K before taxes. Like I said, you're left with 24. You got 17 left now, and you're trying to buy a house, want to live in a decent neighborhood. For a lot of these people, they end up never paying it off. I have a lot of people who will never, ever pay off their student loans because they can't.
True.
They're so far into debt. Now, there's opportunities out there, but if you want to go to college and be a teacher, at least where I live in Pennsylvania, you go to a state school if you got to borrow all the money. You don't go to the fancy private schools because you want to be like everybody else. You go to what you can afford. You look at it and say, how can I get this degree at the least amount of money? Kenan, you're not alone. I still owe $50,000 in college. I'm retired from teaching and I still owe $50K for my education that I'm no longer using. Well, we're using it on YouTube. And here's the worst part. I owe $50,000 for my kids to go to college because I had to sign a Parent Plus loan because they didn't have enough money to go to college. And unfortunately, their dad made too much money as a teacher, and this is even before YouTube, that they couldn't get more money to go to college. So the colleges and the government put it on the parents now. And the Parent Plus loans, back in the day when I went, you could cover it yourself. The loans you got covered it yourself. Now, the loans don't cover it. The parents have to step up and risk their financial future just to help their kids out, which most parents will do. Some take the hard line and say, hey, go get a job. You do what you need to do. But most parents are like, I want to see my kids have a better life than me. I felt that way. I know a lot of people feel that way. You're willing to sacrifice your own financial future, not thinking that it will come to that time where the government wants their money. They're going to start seizing incomes, and that can happen. And so there's a lot of danger there. I think the system needs to be revamped somehow, some way, that you're not putting the parents on the hook. That's ridiculous. Let a kid get an education. And yes, they should have to pay the loans back. But let's give them a chance in life. Let's take care of these prices for college going up way above normal inflation.
Ridiculous.
It's ridiculous.
Right.
Yeah.
So, I just had to jump in because that you hit one of my topics I can't stand is getting fleeced. The average American's getting fleeced by colleges and the government with these interest rates of 7%. How about we tie it to inflation? How about, the normal 2% a year? Why does it have to be 7%? Why does it have to be up to 10%? You're just burying people in student loan debt, and it's frustrating because most families out there, including mine, including relatives, friends, are just drowning in student loan debt. But no one wants to talk about it. And you know what? I think it's time America wakes up and figures out a solution.
Well, America always says, Kenan, I get nervous now when you mention certain words. You start getting squeezed by certain platforms. I'm not going to call a name,
right?
But a certain country, it's funny how a certain country says, "Hey, student debt is a big problem," but then they are the ones that owns the student debt. It's just it's totally asinine. It's just like no offense to you guys that smoke, it's the cigarette companies have to pay for the advertisement that tells you smoking kills, right? But on the other hand, they're the ones that's selling the cigarettes.
They do.
It's just, it's just some of this stuff is just crazy. All right. So hey, we're gonna go through a hot round. Let's just shoot some stock and some crypto out, some hot stock and some hot crypto. I'm gonna take a few minutes, and then I'm gonna go from me, and then Mo, you're gonna take over from there. And if you got a share screen, let me know. And then Kenan, we're gonna go from there. So I'm gonna just talk about a few things, and then I'm just gonna call this hot stock, right? So one of the oversold, I believe, a stock that's oversold is still Volta, beat all the way down. Now, I'm gonna tell you right now, if you invest in Volta right now, they don't have a steady, so far that I know, steady CEO now. So I would not be going heavy in, but it is oversold. Here's what I also will say. For every dollar that you're going to put into Volta right now, have $2 to put in Volta when the recession comes. Govern yourselves accordingly. So I just think that that's the thing. Solana. If Solana comes back down under $88, Solana, which is cryptocurrency, I have to say it slowly because I was saying Solano. I think that's me. That's my support. That's my buy signal. I buy Solana when it goes under $88. So those are two. So I'm also going to talk about let's talk about Twitter and DWAC. Okay. Matter of fact, I'm going to show you guys something on DWAC, and let's deal with some warrants. Here we go with the warrants. Now, if you bought some DWAC, or if you own this hype right now, Elon, I don't know if he tweeted or he said it, that the #1 downloaded app for social media platforms on Apple right now is, True Social, DWAC, right? So he makes this, right? We have to understand, he makes this statement. So we have to understand how Elon operates. Truth Social is a direct competition to Twitter, which we know that Elon made the bid to buy, right? So we got to understand how Elon works. So now what happens to Truth Social, or DWAC, which is the SPAC that's going to own Truth Social? It's running up, right? You guys know how I make the money. I'm going to say something bold. You can believe it or not. In 2020, my portfolio was up by 300%. And I will tell you how I did it. I did it with warrants. Those of you that followed me on these warrant plays in 2020 and early 2021, please leave a comment and let the people know. Listen, I'm going to go to a screen here and I'm going to show you guys something. right now because I know that this is a hot topic right now. So what I'm going to do is, you guys, I'll be right back to you guys. Let's go here. And am I doing this right? Okay, there we go. And 4. All right. How come I'm not full screen, Rodney? Where? I got my guy. Oh, here we go. Sorry, good people. I'm going to just screen. I'm trying to show my screen. That's on yours. That's here. Yeah, but I'm trying to show just my screen. Just my screen.
Go to your top.
That's what
Larry.
I did.
Larry
I'm talking to Rodney. Y'all say hello to Rodney. Larry himself.
Larry
oh, there we go. There we go. All right, good people. Sorry about that. All right. So let's look at this right now. All right. We see where, look at this. Look at this, good people. All right. We see where DWAC ran up today, right? 9%. All right. DWAC ran up 9% because of everything that's going on with, the commotion. Okay, what does this mean? This tweet, okay, is about to run up again, right? I also think that Donald Trump, we're not talking about politics, only as it pertains to our money. I also believe that he will be back on Twitter. We got the two Twitter, it's going to be a Twitter war between Donald Trump and Elon Musk. These two love to tweet. But I want you guys to pay attention to the warrants. Look at that. This is what I always say. The warrants always outperform. When it's a SPAC, the warrants always outperform. So if you could see this, good people, I want you to see that today DWAC is up 9%, but the warrants are up almost 20%, twice as much. You guys see that, right? All right. So what I wanted to say about that is there's money to be made on the warrants. Now, personally, I think that personally, me and Josh discussed this today. Personally, I think that DWAC could run up to about 60, and it's going to trade sideways because there was a lot of selling actually, and it's still showing that it's kind of bearish. Let me see if I could show you guys this again. Yeah, it's kind of bearish, right? And so here we go. Sorry about that. Let's look at this. So it's kind of bearish. And so, yeah, it could go up. If I was in DWAC right now and it ran up to 60, I would be looking to sell it. That's what I would be doing, right? And so I'm just going to tell you guys that it's tricky, just like that song. It's tricky. It's tricky. It's tricky.
Can I jump in?
BC Boys? I don't even know if that was BC Boys back today or what.
Yeah.
Run DMC. I don't remember who. You're going back in the 80s there for us, man. That's an old school song.
It's on that movie.
I want to give a shout out. I want to give a shout out to Neil P in the comments. He just said shout out to Kenan for DWAC, right? Mm-hmm. This is one thing that I want you to understand. This is my mindset when we're looking at the stock market. And the reason that I'm sure that he said this is because you have to understand what is called a peripheral kind of a play, or even colloquial terms, a sympathy play, right? When you see that Twitter was running up, and then you know what? You say, oh man, I might have missed that one. Guess what? The moment that you feel like you missed it, you go and look at something very similar, right? You go and see people are saying, oh man, I don't know how many times I heard them say, people, oh man, Elon's buying Twitter. I'm out. I'm getting off of Twitter. Guess what that means? They plan to go somewhere. They're not letting go of social media. So then we hear Elon Musk say, oh man, True Social has now become, like Larry just said, the top app on the App Store on Apple. Notice he didn't say on Google Play, which means some potential is still there. It doesn't mean they're going to rush and buy it, but it means you at least got to keep your eye on it, because you understand this is so political in nature that there are a lot of people who support certain candidates and they will flood in, right? They will just straight up flood in. And then with that little pump from the flood in from people, institutions will get behind it and then pump it up even further. And then you'll be like, man, I remember when this thing was XYZ amount, right? So you got to keep that in mind. So whenever you find a stock, let's call it, for example, NVIDIA. You see NVIDIA is running and then you say, oh man, I missed it. Go look at AMD. Go check it out. right? Go see what it is, because there are sympathy plays that when a lot of people miss the boat, they're trying to catch the next one, because usually sometimes there are catalysts, and a catalyst is something that speeds up a reaction. Usually there are catalysts for a sector, not just a stock. So if you see Tesla running, go see what NEO is doing. Go see what XPeng is doing, right? Go check these sympathy plays out so you can understand DWAC right now is really running off of a sympathy play in terms of when you're looking at Twitter and everything going on with it. So keep your eyes open.
Yes. So let me say one more thing about this, okay? Here we go. Let me say something about DWAC. I'm gonna make it simple on how to make a killing on warrants. I literally killed warrants all of 2020 and 2021. That's when SPACs, special purpose acquisitions, were hot. I made 4 times the amount of money on the warrants than I did on the stock. So let me explain how I did this. This is not what warrants are about, but this is how I did it. And I did it on every SPAC, you name it, including Lucid. I made a killing on the warrants. So now I'm not telling you to go buy DWAC, but what I'm going to tell you is if you feel like you need to get into DWAC, what I would do is take my money, split it in half, buy half on the warrants, and then buy half of the stock. So the warrants is usually followed by a W or a WT warrant. So it'll be the DWAC warrants. You're not going to exercise the warrants. You're not going to run the length of, you're not going to worry about the date that you can exercise the warrants. You're literally going to buy and sell the warrants just like it was a regular stock. And here's the buy signal. This is so important. It worked every single time. When the warrants trailed the stock price by more than 60%, then that means that you can make more percentage on the warrants when the stock runs up. So for instance, if the stock is $100, right? And then the warrants is $40, that means it's trailing by 60%, right? Did I do that math correct? But when that gap gets wider, where the warrants are only a quarter of the stock, then there's more money to be made on the warrants. As a matter of fact, the warrants will start running twice as high, like you just saw, 3 times as high, and sometimes 4 times as high. And then when you feel like it's not going to run anymore and you want to sell the stock, literally hit the sell button on the warrants. You're not going to exercise them. I'm telling you guys, it worked I thought I was robbing the bank. It was working. And I brought the family along with it. So I just wanted to give you guys that on the warrants. You don't even need to know what a warrant is. All you need to do is find out where to get it. I'm also going to tell you this is what I found out today, gentlemen. Guess where you can get the warrants at? Because you can't get them on you can't get them on Robinhood, and you can't get them on Webull, but you can get them on Moomoo. So if you have Moomoo, you can go and get DWAC and then put a W, DWAC, and put a W behind it. Those are the warrants. And if you don't have Moomoo, go ahead and click my link below, download it, and put $100 in. But you can buy the warrants there. And I guarantee you, if the stock goes green, you will make twice as much money on the warrants as you do the stock. I'm done.
So let me just explain the warrants to everybody real quick in layman's terms, right?
Yep.
You got an iPhone right here. Imagine you want to buy an iPhone. Let's, for round numbers, say iPhones are basically $1,000, right? It could be 1,000. Let's say the new iPhone comes out, it drops down to 900, right? So the iPhone's price can go up and down just like the stock. Now you got a contract, right? You have a contract that says this $1,000 phone, you have a contract that says you can buy it for $1,010, right? But you got to buy this contract. It's not free. The contract says you can buy the phone for a little more than it's worth, right? But you have a contract that's basically written in stone. Now, what if the phone, whatever happens, there's a phone shortage, and now this phone costs $2,000. Whoa, somebody just doubled their money. But you got a contract that you might have paid $10 for that says you can buy it for $1,010. Guess what? this contract is now going to be worth almost the difference from $10 to being worth basically $900. So then the contract is going to move a lot faster than the underlying phone. So it's like that. It's like an option, but it's just different. It's different. It's like a stock option, but it's literally just different, where it's about the contract that is following the underlying security. So when they move up a lot, think about it. Options contracts cost way less than the stock themselves, right? Or the phone. Getting a contract for it is going to be really, really cheap. So it takes a lot less for it to double than it would for the underlying stock to double. So it's just simple as that.
Mm-hmm. Go ahead, Mo.
Well, what's the question you want to go with here? Because when I look at a lot of these, I was thinking about what we talked about a little bit ago about some of the plays out there when you were talking about oversold stocks, not to relapse some of that.
Mm-hmm.
Yeah, I had a couple written down there. Spotify, I think, to me, Teladoc, Airbnb, and Ethereum. For those crypto lovers out there, don't sleep on Ethereum. Ethereum's very correlated to the market right now. And yeah, we saw it drop a little bit. The merge is coming. The consensus layer will be here. And I said it before when we met. This is going to be a huge opportunity. How deflationary does this become? How much are the rewards going to be paid to proof of stake? And I know there's people out there who mine and they got a huge following. I got my miners as well. But those days are almost over for it. And I do believe before the end of 2022, hopefully in Q3, we see that merge happening. But Airbnb, I think a lot of people have a lot of saved up money. We have record savings from U.S. citizens, and that could lead to a big time use of Airbnb services. I think Teladoc with COVID, that it's trading down to $60 something a share. If I pull it up, it's crazy how low this thing is. Yeah, $55 a share. Absolutely got crushed in after hours today. 36% down. But if you look at this and you think about COVID and you're looking for some chances, as we talked about this, the growth opportunities, man, this is the kind of play that I watch and I think, all right, they're going to continue to grow. Of course, it's a newer company, a newer sector, but it's going to go through the pitfalls like it's going through today. Like I said, down 36% in the after hours. Mm-hmm. You look at this company, the DraftKings, so like you guys mentioned Volta earlier, look at these companies that have opportunities in these newer sectors. Even though they're not brand new, they haven't really been adopted fully. And so once you see not 1 to 2 cars out of every 100 being EVs, not a lot of people using Teladoc services, but did you see how many big corporations and healthcare systems are using their services? And Volta's stepping up, ChargePoint stepping up. You see it growing where now, 50 out of 100 cars are using EVs, are being sold are EVs, where Teladoc services aren't being used just by a small fraction, but many, many more people are getting comfortable doing Teladoc, using their services. And then you start to see that money rolling up 5-10 years down the road. There's some opportunities. Spotify, I think Spotify is absolutely still an opportunity for the long term. And I know there's some people out there, anytime we have this fear, uncertainty, and doubt, like Disney, Spotify, they had issues out there, a lot of people upset. It drives the price down to a point that I think it was way too much. And for those willing to take a little additional risk, gives you that opportunity to make some quick money. For those that don't want the risk, Berkshire Hathaway, don't be afraid to buy that stock. Give you an idea. Since 1990, Berkshire Hathaway has returned 6,897%. What that means is every dollar you invested back then is now almost 69 times its current value. If you put in 10 grand back there.
Hey, Mo.
Yeah.
Tell them that Berkshire started and it went through a lot of bear markets. It went through crashes. It went through corrections. Hit on that. About people that just bought it, please.
Well, Berkshire, there's a lot of story. I don't know if I have all the details straight up here, but when Berkshire, Warren Buffett and his crew wanted to buy Berkshire Hathaway, and they had an agreement with the people. And I might be off a little bit here with the story, so I apologize if I am. But they came up with a price, and the owner, asked Warren Buffett, "What are you willing to offer?" And Warren Buffett said, "Look, I'm willing to offer. I'm just throwing out a number here, $50 a share, and I'll buy out your company." And the guy said, "I'll take it back to the board." And when they came back, they said, we'll sell it to you for 50.25. Like they added a little bit on to try to get a little bit more money. And I forget how it went, but that company was Berkshire Hathaway. I don't know what they did for services back then, and I forget how it went around. But I don't know if Warren Buffett agreed to that. I don't know if he went how he ended up getting the company, but it irritated him to the point that I swear it was a hostile takeover. And at the end of the day, he was very insulted that they used that against him. And so if you look at Berkshire Hathaway, most of the offers they put out, if not all of them, are final offers. The initial offer is it. And that's what you see. And Allegheny, I think it was much the same as well. They didn't want to pay the fees for the brokerage that was handling it. It's quite the story. But long story short, they've been through the ups and downs. They buy value. They find companies that are selling themselves cheaper than the book value, and they take advantage of this. And right now, like I said, the S&P 500 since 1990 is up 1,000%. The Berkshire Hathaway stock is up 6,897%. You are getting almost 7 times what you're getting with the S&P 500 by dollar cost averaging. And even over the last 5 years, which besides COVID has been a great 5 years, the Berkshire Hathaway is up 100% and the S&P is only up 75. I continue to say this. You can go into the S&P 500, or you can look at a company like Berkshire Hathaway that thrives on value and just dollar cost average into that. And of course, it's $500,000 a share, or roughly. It's BRK.A, or you can go BRK.B. But they have fractional shares now, so you can just get out there and buy the fractional shares. So you don't have to put in $500,000 for one share. You can put in what you got. So that's just what I wanted to add to the conversation that we're on right now.
Let me share this because it is so true. So this is 1990. This has been going through crashes, through corrections, through bear markets, through recessions. Just Google. Just go back and Google. How many recessions have we had since 1990? You'll see that through a recession, through a bear market, a correction, all of that. This is the power of dollar cost averaging. Just be steadfast. And I'm going to just tell you guys this. Look, I know it's rough. And we're going to close this out because I'm trying to be close to an hour. I know it's rough. I know you're seeing a bloodbath of red. So am I. So is Mo and Kenan. But I'm going to tell you guys that when you know that you're done with a bear market, when you know that you're done with a recession, you know when you're truly done, when you know that you're done, when everybody tap out. And then big money, smart money, comes back in at the bottom and drives it right back up, right? And so Sunday, I know I'm not trying to get preachy. It's like the story of Moses. We all saw the movie, right? If you didn't read it, there's always going to be somebody that's like, even though you on your way to the land of milk and honey, just somebody, just like there's a lot of negativity right now. What I appreciate about these two gentlemen, we know that negativity comes when the market is down. We know this, but we made a conscious decision to continue to give you guys information. Even through the naysayers, they come, when everything is green, we're the best things since apple pie, right? And there's a lot of YouTubers that are no longer on YouTube. The ones that only did this stock or only did that stock or don't know the stock market, they're all quiet now. So they're not getting any flack. But I'm going to tell you that when you tap out, the biggest mistake I did from the first to my second trade was to tap out. Because if you find, like Mo said, good solid companies like Berkshire, and you just continue to dollar cost average, you got to have conviction in this. These are not hype plays. And just try it for 10 years. Where you going? You're not going nowhere. Just try it for 5 years and then see how that goes. Then try it for 10 years. You know, just bite-sized pieces. You will soon see that the way to truly build generational wealth is to actually hold a stock for a generation, right? but we want to make sure it's the right stock. Every stock is not a buy and hold. Some of them are swings, but the flip side of that is every stock is not a swing trade. Some of these stock you need to hold on to for at least a generation if you want to build generational wealth. So, hey, I always say we all got brokers. You know, you got negative people. I'm pretty sure when this video posts, there's going to be there's going to be negativity coming. It's just, that's because the market is down. But when the market is up, it's all positive. But I appreciate you guys, and not just Mo and Kenan, but I appreciate you, the family, because what we're going to do is we're going to help keep the house clean. And we just going to go, nope, none of that here, because a lot of you guys are going to come back to this time and you're going to thank God that we stood in spite of and said, stay the course. You're on your way to financial freedom. What do you got to say about that in closing, Kenan?
I gotta say, I agree with you 100%. You know, when the stock market is pumping up, YouTube is pushing the content out, then, you know, everybody's seeing, everybody's like, oh yeah, this is great, right? And then there are a lot of stragglers who get on board. And I'm not talking about people who are viewers. I'm talking about YouTubers. Everybody's a genius in a bull market, right? A lot of people disappear, go away when we're in a bear market, but they don't realize that this is where wealth is built. And this is why we come on here to show you, hey, look, now's the time to get your cash up. Now's the time to look at the companies that you need to get in long term. Like they said, hold on for a generation. We're looking for these kind of companies. And just know, you got to believe in yourself before anybody else will truly believe in you.
Street Guru, we love and appreciate you. Thank you so much, Street Guru. I'm saying an extra prayer over you tonight. Hey, Mo, what do you got to say about, and we're dead serious. You guys don't understand. This is ministry for the three of us. Like, we know what the end result is going to be if we just stay the road and pick the right companies. And we know what it means. But it gets difficult when it's red. When you open up your app and you just see another day of blood red, it's difficult. We get it. We get it. But we're trying to tell you that you just stay the course, right? Because you're going to be wasting this money on buy another car, right? Depreciation, a depreciating asset. You're going to do something with this money. Why not have an opportunity to build true generational wealth? Because all it takes is one time and your mind will be changed. Then you'll have a made up mind. All right, Mo, go ahead.
Yeah, I'm going to follow right up on that. I got to tell you, Larry, I think about some of the money I wasted through life, shoes, cars, going out, having fun, trips, whatever. And they all go down in value. And everybody always has an excuse of why they have to blow their money. But I can tell you what, and even in this market dropping what it's dropping, the S&P 500, down another 10% almost here, shortly getting there. It's ugly. And from the beginning of the year, it's down like 12, 13%. It's just nasty out. But I'm going to tell you, in the long run, we know we're going to make money. We know the market's going to recover. Yes. It always has. It always has.
100%
and so if you're going to go out,
of the time.
Absolutely. Yeah, and we're going to make money. So this is your chance. And this doesn't go with just the stock market. Crypto. I still am a huge believer that crypto will explode. I think the metaverse cryptos are going to do well, but the DeFi cryptos are going to do even better. And yeah, that does Solana. And of course, I'm all over Ethereum. Don't get me wrong.
Yes.
And Cardano. I like these. And Sandbox and Meta, or not Meta, the Mana cryptos. Let's keep them straight here.
Yes.
And I think they're the plays that are going to do really, really well. And I'm looking at doing some projects out there in these. I'm investing in some of them other ones. I think they're going to do well. And so I see people talking about like Bitcoin and Ethereum way back 10, 20 years ago of whatever it was when it first came out and how much it's worth now and how you can make so much more than in the stock market. Yeah, but that's hard to pick those brand new ones and to get access to them at that very low level. So I'm still looking at combining my crypto, my stocks, and I'm not giving up. I'm using this downtime in the market as an opportunity to dollar cost average into my main plays, using the tax code to our advantages, maybe selling off, getting a little refund from the government from some of those tax losses, and just make sure I am fully invested, because I do believe that the market is at a near low. Did we hit capitulation yet? Well, the VIX is saying we're really close. I think it might be one more big bad day, and it could be a nasty one. It pushes the VIX back up there close to 40. But then all of a sudden, you start to see another short-term run. And then, like I said, trading sideways, up and down, sell the rips, buy the dips, and you got to be smart with it. Rotate longer term for at least the next 2 years into maybe some smarter value plays, even though they're not excited. Keep a few growth plays on there that are leaders in their sector, so when it does turn, they are out there making the most. And I think it'll be all right. And that's just my opinion on the deal and how I'm handling it. There's definitely opportunity and money to be made.
Yes, yes. Hey, gentlemen, we're gonna just kind of just taper it right there. I just wanted to make sure that we just gave the people that we just wanted to hit you guys with some good, solid information, and we're just going to continue through. We're going to continue through the red times, through the bad times, through the hate, and because the same people that will come on and literally follow you just to give you hate will be saying, oh, you're the best thing since sliced pie when we go back into a bull market. But we're not going to let anything deter us from helping you, because here's the truth. There are trillions of dollars to be made, trillions with a T, through the stock market and crypto over years, right? Either you and I are going to get it, the average Joes, or it's going to continue to pump to the 1 to 5%. That's it. I can never make that much money by myself, Mo or Kenan. That's it.
Right.
So do we continue to let the 1 to 5% have more than 60% of the country's wealth? And regardless of what country you are, the stats are pretty much the same. Or do we risk being demonetized, risk being censored or flagged, because we're telling you guys it's your turn to get some of your money? And you say, well, how is it my money? Trust me, it is your money. It's our money. So we're going to stay here. We're going to meet. Whose turn is it in 2 weeks?
Mine.
Mo.
We're going to throw it on my channel in 2 weeks. So make sure you guys are subscribed to my channel down below so you don't miss the next time we get together in 2 weeks.
Wait a minute, Mo. Let's just try something right quick. Mo, you got your do you have your screen up? Go to your page, Mo.
Yeah, I got the
pull up your YouTube page.
I can share my screen, and then here we go. I'll share my screen. There it is. You guys should be able to see it. I have it shared for you there.
Okay, you guys, look at that. Look, I want everybody on here to look at Mo's page, right? Mo is about to hit 600K. How come we can't How come we can't just make that happen? Like, how come we can't just make that happen, good people? Like right now, like if you are subscribed to me, we're going to celebrate one another, because we're going to celebrate you guys when you make money. How come we can't just see those moves right now? I'm telling you,
I got to tell you, we only need 15 people.
Listen, if you're following me and you have not liked Mo's page, literally on this video, the first link, I believe yours is at the top. Go and click Mo's page and hit the like button. Let's have a party and get Mo to 600. Because all Mo is going to do is continue to feed the family. Let's make it happen, man.
Yeah.
It would be cool if we see this number pop up right now. We got 2,000 people watching us. So if you're a fan of Kenan, if you're a fan of Larry, let's get Mo to 600. Let's have a party. We know it. It's a lot of red out there. But hey,
you guys remember when we all started? I mean, think about this. I mean, I love the community. Help me get up there. I'd greatly appreciate it. We'll do a special 600,000 live stream. And I got to say, I remember when I had like 100 people and I was so excited to get up there. And all of a sudden you get up to 1,000 after a couple of months and you're just like, wow. And to think that we're close to 600,000 blows my mind. I know you guys are up there close to 500,000 and 600,000 as well. It just is a journey that I hope never stops. And I got to tell you, I can't wait to see that number flip over to 600,000 and continue on trying to help people out. Of course, this is one of the toughest times we ever been in since I've been on YouTube. But I know there's no doubt in my mind we're going to get through this. And with all three of us helping everyone, I think we can do very well.
Yes. Yes. And we're gonna continue to encourage and uplift and bring one another
numbers
up. Go ahead.
Numbers are going up good. Numbers
There
going
you
up
go.
another 100 there. So I do appreciate it.
There you go.
Let's go.
Let's make that happen, good people. Let's make that happen here soon. That's an easy task for us to do. It's too many of us for him not to hit 600 like really, really soon. Okay. Hey, I want to thank the gentleman for all your donations. He gave 3 different times. I'm trying to find his name that gave the super chat. I'm trying to find it. I'll pin it. Hey, we appreciate everything that you guys are doing. Hey, Kenan, say something in closing.
I want to say this. Please, 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 please make sure that you yourself are paying attention to the dips. I want you to look at the 2020 dip. I want you to look at the 2008 dip. I want you to think this dip is my chance to win. You got this. I'm telling you. You got to look. There's 2 ways that you go about this. Either you can whine or you can climb. I chose the latter. I hope you choose it too. Let's get it. Come on now. That's what I got to say.
Bless you, Street Guru. You are awesome. I appreciate you. You are awesome. He's given like many times. So bless you, Street Guru. We hey, just bless you, brother. Mo, what you gonna say in closing?
I just don't give up. Don't give up. We've been punched in the face a lot of times, and this is going to be another one from this market. Some of the crypto, some of the stocks. Don't give up. Keep dollar cost averaging. Find your plays. Find the leaders. Enjoy the ride back, because we will be back to that green levels that everybody's coming back, and they're going to be asking you, what did you do? I heard you made this much money. Yeah, it's during these bad times that we start loading up some of these other plays, and then all of a sudden when the market turns, we're all celebrating. Right now It's hurting a little bit, but don't worry. These times will pass, and we will be cashing in down the road. There's no doubt in my mind. That I can tell you.
Mo just said this too shall pass. Did y'all hear Mo preach that message? Yep. This too shall pass. It has.
I'm gonna be honest with you, Larry. They're the words in my head. I just couldn't get them out that way. Thank you for helping me out. That's exactly what I was thinking. Yep. This too shall pass.
Shall pass. And then one day, though you're looking at this sea of red, one day you're gonna be looking at a sea of green. But what's gonna happen is the people that tapped out are going to buy what? At the top again. They're going to be hearing, they'll be out of the market, they'll be out working. But remember, even though you have red, you got thousands of dollars that you've been DCAing in, right? That's why time in the market always outperforms trying to time the market, right? And so what we want you to do is to double down when a correction does come. And we're going to buy all the way through that. Then what happens is you guys will be on fire when the bull market happens, because some of these stocks you will have bought 90% down, 95% down. And in the next 18 months after the recession, some of these stocks you guys will be up 100%, 200, 300, especially these very small cap in emerging markets. Some of these EV plays, some of these gambling plays, some of these things are so beat down. Mo, DraftKings. Come on. What do you think DraftKings will be 3 years from now or 2 years from now? You know, the multiples on stock like that will be just insane. Best time to buy them when they're at their lowest. Yep.
And they control 30% of the market, Larry. They control 30% already. You're talking a growing sector. It's going to be huge. And California votes in November. If they vote to okay, which I think they will, this stock is going to move into that, which is going to be the biggest populous state in America. They're going to be huge, in my opinion. Now, you got to get through the growth pains. But you know what? Like I said, I think this is an opportunity long term.
Okay, I'm trying to see Guru ask the question. What is his question?
Guru was asking about something called pulse chain. Now, I just tell you, family, straight up. Okay. I don't speak on things that I don't know about, That's
All right,
why
go,
when I
go about it.
speak, it's as if you say, people like, man, Kenan, how do you sound so confident in what you're saying? Because I only speak on things that I know a lot about.
I'm the same
And then
way.
everything else, I listen. So with Pulse Chain, I can't intelligently speak on that. So you're not going to hear me speak on it. But when I do, and if, then you'll hear about it. But until then, family, I appreciate you for letting me know about it.
Okay. And I will
I got
tell
nothing
you,
because I haven't looked that one up either.
yeah, I will tell you the same. I don't know about it, but I will check it out. But I really don't know about it myself. And there's a lot. But I can tell you right now, though, Street Guru, right now, and you know, these guys may or may not agree. Right now is not the time to be chasing hot, really like hot stock right now in this market. Because I'm gonna tell you this, and I know I keep saying I'm gonna sign off. There's two things that's gonna come in the short long term. The next meeting, the next Fed meetings, what's that? The FOMC meeting, the next Fed meeting, and the month after that, right? So we got May's Fed meeting and June's Fed meeting, right? So we got two consumer price index for the next 2 months, and then we got two meetings. And in those two meetings, we will see where inflation is from the CPI numbers, right? But we will also see where the Feds are going with the interest rate hikes. The next two Fed meetings, meaning next month and the month after, will be the most volatile, I believe, will be the most volatile. That's when the volatility for this year, the most volatility, will be over. After the market prices in those two CPI numbers, because we will truly see if inflation has peaked. And then we will also see what the Fed is going to do. That's what I believe in the short long term. Now, knowing that, I think we all agree that we see that the fourth quarter will be better, right? I think we will have a better stock market this year in the fourth quarter. So be careful, Street Guru, because there's plenty of time and there's plenty of volatility left, right? I'm getting back into Doge, but I'm going to wait until all of this bad news beat it down, you know? And so I'm not going in heavy on anything right now. Okay? All right. So would you guys agree or disagree?
I'm
I
with
got to
you.
tell
I'm
you,
with you.
yeah, there's, I think values where you're looking right now with leaders in the growth sector as well. I'm not chasing many little stocks out there. There was a time where you could buy almost any stock and crush it, and the more risky it was, the more money you made. But now we're on the other end of that spectrum, where the more risky it is, the more you're going to lose. So
Yes.
we'll have those times again, and we
Yep.
will. It's a cycle, and we'll get there. But right now, like I said, I'm playing the cards close to my chest and trying to make sure the value is there.
That's it. I'm the same way. We just got to, there's a time to move forward and there's a time to sit back. Now's the time to cash up and sit back, right? It's just time to cash up. And I will tell you, listen, it's a psychological thing. Get another trading platform. I'm telling you, it's the best thing I've done. So I have 6 trading platforms, and some of these guys might have even more than that. But I will tell you, if you want to cash up, then download the Moo link. I don't care whose page you do it on, any of our page. But since you're here, just go ahead and hit my link below. Put $100 in there and don't just hold that money. Don't do anything with it yet, right? We know that these 2 months is going to be volatile, right? There will soon be a bottom. Some people think the S&P is coming down to 38. Some people think it's coming down that low. Some people think it's coming down to 4, and that will mark the bottom. But nobody knows. Everybody kind of agrees it could come back down to the 4. Don't you think so, Mo?
Yeah, I thought of maybe another 100, 150 points from here at max.
Yeah,
And
max.
I don't even know if we're going to get there. But I
Exactly.
also know other people, like you said, thought I'd get to 3,000. And I thought, no, there's
3,000,
no way.
Yeah,
But
3,000,
you
3,800.
just don't have that crystal ball. So we'll
Right.
find out sooner or later. I'm playing it at the low as it goes is another 100, 150. And I think that could happen in the next 2 weeks. And I'm going to be a massive buyer with the dry powder I got left. So
Right. And you may say, why would you do that with a looming recession? because Stockmore and myself and Kenan knows that 80% of the times we hit another high before the recession comes. So there's money to be made
And I think we will.
until the recession comes. Okay. So,
Yep.
hey, we appreciate you guys. Listen, make sure you go to both of these gentlemen's page soon as we finish. If you are one of my followers, I strongly suggest that you subscribe to their pages. I have links below for their pages. And then, of course, check out the links if you don't have both trading platforms. And we're going to leave it right there, good people. Hey, live, love, laugh, and learn. You know, Kenan going to hit you with the P's. Mo going to say, stick around. I think you're going to like what I got for you. We're going to continue to make sure the family is fed through all of this, all right? We'll see you later. Peace.
Take care.